Alright, Pragya, thanks a lot for that. The stock now down, in fact, 2.5%. MT Educare last week actually reported earnings. We haven't spoken to the management, so we've got a chance now. Yagnesh Sanghrajka, CFO of MT Educare, now joins us. Mr. Sanghrajka, good morning. Your top line fell for the last quarter. What led to that, and what's the outlook for the current financial year?
Typically, the top line actually has gone up, if you see, from about, let's say, 43 crores to about 51 crores, including the operating income. So the top line was up. And for the entire year, the top line was up by about 13%, from about 202 crores to about 227 to 28 crores. While the bottom line was up by 23% because of enhancement in operating margins, as well as there were some deferred tax credits that came across. We had sold the college campus, as you would recall, sold the college campus in the last quarter. That kind of gave us some deferred tax credits, and that kind of helped the PAT to move up because of the lesser tax provision. So that was the story. So the bottom line is up by about 23% to about 26 crores normalized, and there was an adjustment of about 3 to 3.9 crores on account of the change in method of depreciation. So hence the reported PAT was about 30 crores. However, the normalized PAT, if you make the adjustments for depreciation, that came to about 26 crores as compared to 21 crores in the last year.
Okay, point taken. Mr. Sanghrajka, can you just explain to us which are the key segments that you operate in, and to give us a sense in terms of how each of these segments did in the quarter gone by, maybe in terms of a decline or a growth, as well as on the EBITDA front?
Yeah, well, as I said earlier, this year has been pretty good in terms of various initiatives that were taken, especially one that we are now developing internally. There's a skill development vertical within our own kind of businesses is growing. We're getting a lot of good projects from government for our core verticals, which is the science and the commerce vertical as well. So a lot of good outlook there, which will obviously augment current year's revenues as well. But the last quarter typically is for us not too many lectures happen, so typically it's a weak quarter so far as the operating kind of core fees is concerned. However, because of these large size projects that we are now getting from the government ministries towards education projects, which we won in the last quarter and executed also, this kind of took care of the kind of dip in the some of the core verticals. However, in the Lakshya business, there has been very good admission season going on currently. That's one vertical. The Karnataka business is growing very well. And now in commerce, we are starting to kind of expand outside of Chennai as well into other states in South India. So you will see a lot of these initiatives turning around in this year. And some of the non-core businesses, which were kind of not really making money, have been closed down. So that is the reason why you see that little bit of softness in the top line growth this year. However, that should be addressed going forward in the 15-16.
Talking specifically about the Lakshya business, can you give us some more details on the transaction that happened, the 100% stake that you acquired?
2012 we kind of took over. We acquired 51% in April 13. January 15, now just 3 months back, we acquired the rest of the 49 as well. So now the Lakshya piece, now the North India business is now 100% owned by the company. And a lot of good synergies actually, with the whole Mumbai Lakshya business grew on top of the North India business. So we've got almost in the Lakshya business almost about 25 crores top line, which probably wasn't there 3 years back. So that's the benefit to the science vertical that has came on account of the Lakshya acquisition between Bombay and North India.
I can understand that. I wanted to understand what kind of money did you pay for that?
So the consideration paid is 12 crores for the entire acquisition. So 12 crores was paid for the entire business.
Fair enough. Sir, give us some guidance. You did 13% in terms of total growth in this fiscal. What can we expect going into FY16? How much do you think you can clock in?
See, generally, Ekta, we don't give guidance normally, but the indication is that, internally we are very sanguine about at least about 15% to 20% growth in terms of revenue. And as you can see, the bottom line has always been robust in spite of all the technology initiatives taken by the company. A lot of content now is ready for the company, and we'll be rolling out RoboMate and the learning management system. Some of these initiatives take a lot of money to invest. However, even in spite of that, we are quite hopeful of 25% growth in the bottom line. I mean, we are quite confident about it. We'll see as the year goes by. And also, these new verticals on the skill development side, some of our core verticals, government projects have turned around quite well. So these will also chip in. So I think we should be good in terms of enhancement of operating margins by at least about 0.5 to 1%. Which will lead to a bottom line growth of about 25% for sure.
Okay, and since you've given us revenue of 15 to 20% and bottom line of 25%, tell us whether your margins will be sustained at 20%?
Yeah, I mean, so EBITDA margins today are about 21%. In the next 3 to 4 years, we should see enhancement going to about 23 to 24%. That's the internal target we are setting for ourselves.
Try 16 or eventually?
I mean, the next 3 years, the EBITDA margins moving up by 0.5 also is a big shift. So, we're trying to do this much more than what is expected in the past. So, but over the 3 to 4 years, I'm sure the operating margins will move from 21 to about 24.5%.
Okay, fair enough. We leave it on that note. So, thank you very much for joining in and talking to us. So, that's the guidance coming in from MT Educare. The stock hasn't moved much on a YTD basis, but let's see. Seems like maybe the coming fiscal should at least see 15 to 20% growth in terms of revenue as compared to around a 13% growth that we did in the previous fiscal. Time for a break now, but we'll get you an outlook on the FMCG space.